Okay, everything ready. So, welcome everybody. Thanks to join us in a new scientific moment. As you know, this is a space of talks especially dedicated to technical topics about things that we work with, like blockchain and things technology related. So, as you know, we are open for new talks. So, if someone has something to explain us, you can join us in the research channel, in the research forum, sorry, and in the Slack channel that we are sharing the links through the comments. And today we have a really interesting talk about a new DeFi platform on Bitcoin. And this is Tropykus, and today we will talk Mesi, who is the CTO of Tropykus. So welcome, Mesi.
Hey everybody, thank you, Julian, and it's a pleasure for me to be here.
Okay, thank you for coming, Mesi. Well, this is your time. Break a leg.
Thank you. So, I'm Mesi Rendon. I am the CTO of Tropykus. I have been working with blockchain for the last 5 years, and I have been working for web development about for the last 16 years. So, when I first came to blockchain, it was a new hole for me. And since that time, we started trying to come up with new and fresh ideas for this. And of course, one of those ideas, DeFi, decentralized financial, was an appealing one for us. So we decided to give it a try and explore more its benefits for the final users that were meant to use our platform. So the only thing that we understood was that we had to do something to add value to those customers and not to become another DeFi platform. And that's why Tropykus was born, to bring more options to regular people. So this is DeFi for Bitcoin smart contracts, the Tropykus Experience. So this is a little bit what I'm going to talk today. Who are our customers, and also another topics like what historical data did we analyze. Why do we propose a minimum saving rate on DeFi to those who need it the most? I will try to explain if we can, or to answer if we can actually offer microloans at lower rate. Then I will talk about our white paper and more technical details, our tech stack, and I can go a little bit deeper on that, as well as some technical issues and limitations that we have and what we have learned from that. So let's start. Who are our customers? So anyone can use our platform. Although Tropykus was always a thought for Latin Americans who need to save annually at higher percentage rate compared to traditional banks. It's not a secret for us in Latin America that banks usually have a legal way to charge users with higher interest rates. In Colombia, for instance, banks are allowed to charge even 56% APY. And this also creates a barrier for regular people to have access to financial services. So the idea was to get people having access to loans at lower rates, because we actually believe that our services could help people to get financial inclusion. So to tackle this down, I'm going to talk about the problems our customers are facing, or the people is facing in Latin. So as a general point of view of these problems, loans are not accessible to average people. Because if we think that banks are always asking for heavy documentation, and then we have all these bureaucracy processes that make it hard for people to to have access to financial services. Also, saving money in local currencies is not a good option. And this is because our region currencies are always in a devaluation context. So, for example, if we see what is happening to the Argentinian peso, or the Colombian peso, actually, the Colombian peso was the most devalued asset in 2021, and this creates a problem for people to have access to actually save good money, and to have the possibility to use those savings for whatever they want. Also, in a global context, Bitcoin holders have few non-custodial options to use DeFi. Now that I was talking on DeFi and how it could be used, the reality is that there are not many options for Bitcoiners to have access to decentralized financial platform or product. So all those problems, besides other, such as the lack of financial inclusion for Latin Americans, the few saving options in the region, and other topics such as harsh and abusive interest rates, hard access to credit, the devaluation of our local assets. Those were problems that people are still facing in Latin America. And in order to solve this, we thought, okay, first we need to create this new DeFi platform, and then we faced the question where to work on. So in the beginning, all the DeFi alternatives were deployed and used over Ethereum. And as many of us know, the fees are completely paying because our excessive fees to perform one single transaction. Then we knew about RSK because I personally had the fortune to work with RSK in a cooperative project that was called Our Bank. Actually, Our Bank was the seed to create Tropykus. And then we started to learn more and more about RSK. We had access to the team, to the documentation, to the platform, and all this. So this created a new perspective that we could actually use in order to develop and deploy our platform. But more than that, it's the fact that the Bitcoin is the king in Latam. Actually, in Venezuela and in Argentina, we see that people is kind of expert using Bitcoin because of the monetary problems that they are facing on a daily basis. So it's there is no discussion on this. Bitcoin is the king in Latam, so we wanted to take advantage of that, and also knowing that RSK is a side chain that works on top of Bitcoin, we took advantage of that. Also, if you ask people what they prefer to save in, they will probably answer that Bitcoin is more appealing to them because of its competitive price related to other cryptocurrencies. Also, the RSK platform has a lower fee cost. So this means that every operation on this transactional system called the blockchain is going to be more appealing for our users because it's not going to be that hard as in Ethereum. Also, and this is very important, the RSK ecosystem is heavily aligned with our own vision on how blockchain should be. So this was a key point that helped us to decide why RSK is on our platform. Also, because we know from firsthand the tech strength that the whole RSK team has. So it's not a matter of just developing on deploying your platform on this virtual machine. No, it's also the possibility that you as developer has to have access to good documentation, to a good community that it's always willing to help with your doubts and help you to become more efficient on your code and in your product and developments. Also because of the natural the very nature of the BTC and RSK network. So we trust on the security that those network is based on. This is a key feature that we look at. Also because we strongly believe that the future financial system should be on top of the strongest asset. So that's why we believe in Bitcoin. We believe in a smart Bitcoin, and we think that this could be actually the base for people to start its way, their way on the financial system. Also, and this is very important, as I said before, we had strong experience building decentralized applications using Ethereum. So we had the opportunity to create several applications for the government here in Colombia, and also research projects here in Colombia. So all this experience was gathered and mainly developed on the Ethereum context. So we didn't want to lose all that knowledge, and for us was a relief to know that RSK is totally compatible with Solidity and its Ethereum virtual machine. So this was another key point to choose why RSK was the weapon of choice for us. So that's how Tropykus was born. We had the technology, we have the knowledge, we had the idea. So we wanted to solve these customers' problems by setting two key goals. So the first one was to offer people with an option to have a minimum saving interest rate for the people that actually need it. And the second one was offering lower rates on borrows. That's actually what people in Latin America need. And then the question is, how do we do that? So we knew for sure that we wanted to give people saving options, lower interest rates on borrows, access to strong assets such as BTC and USD. So we came up with the different options that we have on top of RSK. So we have also Dollar on Chain and Reef and RDOG and other assets that we actually can use and integrate into our platform. We want to offer users a huge range of markets and saving options. So that was something that we always had on mind. We are really committed to the privacy. We value privacy, so you won't see Tropykus asking for your information. You are responsible for your keys. As we all know, if those are not your keys, those are not your coins. So we won't ask anything about your identity. All that we want is to offer people the access to these financial decentralized services. So you won't see also paperwork. We won't ask for a copy of your ID card or something related to that. We understood also that in order to become mainstream, we needed to enhance the user experience, because at the beginning blockchain was more a tech geeky thing that only the developers understood, and this is something that we actually think it's the most heavy barrier that users has to have access to blockchain technologies. So we are also working with good experienced designers to come up with really neat and nice user interfaces and user experience. All that we want to have is the user in the middle of our work, in the middle of our development. So whatever the user need, this is what we are going to tackle and make a product thought on those needs. Also, because we believe in openness, you will see that our protocol repository is open, so you can see actually what we are coding. And not only that, actually we are being in the process of being security audited. So this is a process that it's going to be there, because we believe on the security and the openness of the protocol. So you will see that every version of the protocol that we are going to release is going to be accompanied by its security audit report, because not only the open code, but the trust on a security audit is essential for our users and customers. And as I said before, we always think on the community needs. So in the beginning, we thought that there were others with the base system that we wanted to tackle. So in the beginning, we knew that Compound has this logic implemented. So we said, okay, this is the base code that we should use. And after that, we knew that our lending used that code, and somehow made it available to run on top of RSK. So this was the base. To talk about Compound and nerd lending was the same in the beginning for us. So we wanted to leverage on that previous work. So, and also because we know that somehow our lending used the previous development that we did with our bank. So we wanted to take advantage of those works, what we previously did with our bank, and also what our lending did, forking the our bank idea, and also what they did forking Compound. So in essence, Tropykus is based on Compound. But then the question is, why did you simply doesn't fork Compound for starter? And the answer is that we want to add value to our users and not just present a plain Compound idea. So we wanted to do something more. So we came up with an idea to offer people more interest on their deposits. But for that, to do that, we needed to do an analysis on what was available at the time. So we ran several simulations using historical data gathered by Compound. So we made a comparison between the more appealing assets in that time on top of Ethereum, of course. So those were Ether and RAP BTC. So we analyzed these data, and we understood that for those strong assets, the volume in the markets that hold those underlying assets as info of markets were less than 40%. So we thought that maybe it was not that risky to offer an interest, an annually based interest for the users that were willing to save on those assets. So if you see those graphics, you will see that the volume in terms of US dollar, it's actually higher for other markets such as USDC and DAI than it were for strong assets as Ethereum and Bitcoin. So we came up with this idea to make a special market where an interest rate could be returned to lenders even if there was no utilization rate for them. And that's why the idea of the micro borrowing and micro lending was born. So if we think about 0.1 BTC, it's not that much, but it's a huge amount of money that people in Latin America could use to leverage their entrepreneurial business. So the mainstream people could take this money and use it for whatever they want. And the best thing is returning this borrow with low interest rates. So the idea was set, and then we started the development of Tropykus. So can we actually offer microloans at lower rates? That's where Tropykus Finance comes in. So you can go to app.Tropykus Finance. We are actually on mainnet and also on testnet. Right now, mainnet is closed for some people that are helping us to understand more about the protocol in terms of what they need and to enhance the user experience. But if you are willing to play with the app, you can also do it through a wallet, just changing from mainnet to testnet. So all the application is also available through testnet, so the people could go there, get some assets through faucets, and just playing around. And once the Tropykus application is open for the general public, you can replicate those dynamics on a production system. So just to make you an example, I'm going to use MetaMask, where I can actually do some savings. So I have the option to microsave at APY 4.1%. So I can, okay, that's way too much. So I'm just going to save, let's say, okay, that I will dare to save more, maybe more. So you will see here that I will save about $10. That's also possible, and the promise is that I will get an interest of 4.1% annually. So I can do this deposit. And also something to mention here is that our platform is also supporting several wallets. So in this case, I'm using MetaMask integrated with Trezor. Okay, so I have MetaMask here. I will confirm the transaction, and I have to approve this with my Trezor. I guess I closed the window. So let me try again. Okay. Okay, something is happening with my Trezor. Let me close my browser and start this, because I guess the pop-up window is not coming up. In the meantime, I guess we can answer some questions if there are some. Yeah, we actually know that there are other DeFi platforms, and what's important for us is the fact that we we are willing to be in an ecosystem where users have more than one option, and also because we understand that maybe those options are there for users to choose whatever they fit more for them. For example, in Tropykus, we are more focusing on a mainstream target. So this could be a good option for people, for Bitcoin newcomers, or for people that are willing to test and to give it a try to decentralize financials. So let me try this again. Okay, I'm here again. Let's hope this time it does work. So I will try to perform my transaction. Okay, yeah. Yeah, this was the window that was closed. I don't know why it's closing. Okay, here it is. So let me put my password here. So I'm doing this with my Trezor, so it's in order to have more security. But also, if you see the wallets, the different offers that you have in wallets, you can use Defiant through our Wallet Connect. We are also in the process to integrate our login, so you could do the same using another option with our wallet. And other known wallets such as Liquidity and MetaMask and whatever you need. We are exploring different wallets. So as you can see here, I could successfully deposit my RBTC. So now I'm earning over that deposit and a previous one that I did before. And this market, it's meant to allow people to microsave. The other market that we have, it's a standard one. We offer here an interest rate based on how much is being borrowed on that market. So you have the two options. But of course, you will also have the possibility to save using dollar or on chain, Reef, and soon enough, we hope to have more options for users to deposit their currencies and start saving. The other thing that I can do here is getting borrowed. So since I could deposit my RBTC, it could be thought as a collateral. So for me, it's going to be easier to ask based on what I have previously saved. So you can see here that while I'm increasing the value here that I want to get borrow, the system is also calculating the risk that you are taking on this loan. So you will get constant feedback on the system telling you if the borrow that you are pretending to assume is safe or risky. And you will see the happy face if I take a lower risk. So let me come up with these example here. And I'm signing the transaction here using my Trezor, and that's it. The other things that you can do and the platform is checking your balance. So you will get here a neat summary of what you are doing with the platform and how you are getting earning interest based on your deposits and also your responsibilities as a borrower. You will see all that summary here. Um, well, I'm getting some questions here. So, how you will advocate for more adoption? Yeah. So, this is something that we actually are working with our team in order to get into more and more people. We are running some pilots here in Colombia, trying to make financial inclusion a reality with people in local shops and allowing them to use the platform. So soon enough, we are going to release our mobile wallet that will not also having access to the lending and borrowing product, but also allowing them to transfer value between them. So I think this is a good way to come up with ideas for them. Also, we strongly believe on education. So soon we will release what we call the Tropykus School, very focused on mainstream people that where they could have resources to know more about what we are doing and how they can benefit from all these products. And also, as I said before, it's not just a thing that we want to cover by ourselves. The thing is that if we can bring more people to use not just Tropykus, but all the different options in the RSK, on top of the RSK ecosystem, we think that this is going to add value for everybody, because the users will be exposed to a wide range of options and alternatives, and they can enrich their knowledge on how to use blockchain for their financials, and of course how to get earnings from their savings. So this was just a simple example of how you could use Tropykus to get good rates for your savings and your borrows. And then I'm going to talk about the white paper. So, as I said before, this was the idea on the air. We ran several simulations, and then we came up with this idea. So, what you see here in the screen is how we started to throw ideas in a brainstorm session. So we came up with this idea where we have here the borrow rate that it's usually seen on other interest rate models inherited from the base compound system, and then we said, okay, we can actually guarantee people with a minimum interest rate from their savings, even if there is no utilization rate. The utilization rate can be thought as how much I have borrowed to people, and that relation against what I have in my market. So other protocols, and I will show this later, or not protocols, but other interest rate models start these earnings from zero. So of course it's based on how much the borrowers are paying. But we are saying that no matter how much is borrowed on that market, we are going to ensure lenders that they are going to get some profit just by saving. What it's true for those people saving in this special market is that they are going to receive those earnings. And the difference is that we are going to pay them using this pink zone plus this green zone. So the pink zone is a subsidy fund that we have in order to pay those interests. And as you can see here, once we are getting more utilization on the protocol, at least on this market, the payment, the interest payment for those users is going to be shared. One part is going to be from the subsidy fund, and the other part comes from the interest paid by the borrowers until we get the optimal utilization rate, where is the point where the system gets its equilibrium and it doesn't need to get money from the subsidy fund, and everything is paid by the interest that the borrowers are paying. Of course, if we increase the utilization rate, you will see a blue area where the market is going to perceive some earnings. But this, of course, opens some questions. Of course, a market such as this cannot be sustainable on time with those just basic conditions. So it does make sense when it is exposed to other markets. So we set some constraints to these protocols, to these interest rate model, or at least markets governed by these interest rate model. The first one is the market cap. The the people pretending to save in this market will be able to do it up to 80% in terms of how much has been borrowed in other markets. Of course, this in a common currency, we take the US dollar as a base common language, so we can know how much has been borrowed in other markets. And of course, the 80% of those borrowers in those other markets are going to be the market cap for this one. The second constraint has to do with the saving limit and the saving the borrow limit, sorry, which is set up to 0.1 RBTC. So people will have the option to deposit up to 0.1 and get earnings over that. More than that, it's not feasible because it would harm the protocol in the long term. That's why we have another RBTC market that it's open, but it's governed by another interest rate model. So you can see here all the equations that we thought for the operation of this market. I won't explain this because it's going to be quite huge. We were recuperating here some ideas on how to explain the protocol and how the people were going to withdraw their earnings and setting a set of markets that we were going to support at the beginning. This is somehow how the idea of the inherited C token would look like. You will see here that we have the idea of the interest rate model. So we have here the inherited legacy white paper, the jump version 2 interest rate models, and our idea, the hurricane interest rate model. So as a C token can, it's like a Lego, you know, so you can take one interest rate model and replace it with another one, the one that fits better for what for the C token purpose. And how we understand the balance of the C token. So apart for this special market subjected to the hurricane interest rate model, the money is going to be distributed into kind of 3 pockets. The first one is going to be the reserves, where we have of course the reserves and the earnings of the protocol, the pool where the people can get liquidity to get their borrows and so on, and the subsidy fund, where the protocol is going to take the money out to subsidize those earnings for people that want to take the money out on certain time. And this was an attempt to explain the team how this idea would look like on the practice and so on. You can see here that the whole protocol has parameters, and you can tweak those parameters whatever to whatever your needs are. So the interest rate model is quite configurable. So this would allow us to explore a wide range of possibilities. So all of this was formally defined on what we call the white paper. And this is the temporary final result we are willing to refine and make it better. So this is the structure. We of course have the introduction, the project, the financial principles of the protocol based on what we knew from Compound, how the interest rate model for the different crypto assets would work. And here you will see that we introduced the novel idea of what an interest rate model that would allow such dynamics looks like. So this is the hurricane interest rate model. Also the monetary aggregates and market dynamics, such as the withdrawal, the reserves, and the subsidy, and the exchange rate in Tropykus, the liquidation, the paper of the role of the liquidators in a protocol of these characteristics. Also the health factor, the price feeds, the governance, the technology. Here we talk why we choose RSK, why we are leveraging the smart contracts technology. And here are some excerpts from the white paper. You can see here the inherited interest rate models. We have the Jumpy version 2 that we use for stable coins such as dollar and chain or so on, and the white paper interest rate model that we use for volatile markets such as the BTC or REEF and those kind of markets. And of course, in a formally defined way, what the hurricane interest rate model is and how it's applied to this special market. Also, we are considering some health conditions for the different dynamics, especially for the borrower, and how to avoid being liquidated in some cases. This is explained in detail in white paper that currently is not available through our website, but it's going to be available pretty soon for the general public to examine. So if you want a copy of the white paper, I can provide one through our Telegram channel. I guess the links are going to be available through the video and also in the description of the video. But of course, you can always reach us through our Telegram channel, and we will give you with a copy of the white paper. But for users, this is not going to be quite understandable because it's more difficult for them to understand. So we came up with a modification that allows people understand it, that if they are in certain range of health factor, they are more prone to be liquidated if they have a health factor near to zero, whereas you have a higher health factor, you will be okay because your collateral is not going to be liquidated. And the formula that represents this graphic is this one. It's just taking the previous concept from the health ratio and making this pretty conversion. So this is going to be translated in the platform with the smiley face that you saw before when I was choosing how much to borrow. And finally, I'm just going to talk about our tech stack and the issues that we have found in the past and how we solve it. So our tech stack is nothing but a base system, a base development system on top of Ubuntu. We use Node. We usually use Fermium for Node. This is the version 14.16, but due to the constraints that the base code was forcing us to use Erbium, this is the version 12.22, we are compelled to use that version for this first stage of the Tropykus protocol, and we hope to make an upgrade on terms of what we are using as based dependency for the future version of the protocol. We are versioning our code using Git, and it's publicly available through our GitHub repository. We also use Docker and Docker Compose to isolate the environment. So we are environment agnostic. So we can ensure that our development does work very well on this provider or wherever. Regarding to the protocol, we are using a smart contract. We got Solidity, all our smart contracts using Solidity 0516. Then we got the first security audit that it's publicly available through our website, and they pointed that we should consider to upgrade the Solidity version. So we did that, and right now we are using 0.86. That was the latest when we got the security audit report. And of course, this brought some challenges. But other than that, we are using Ganache, Hardhat, npm, and Yarn, because the protocol project is heavily dependent on those tools. Our front end is built up on top of Vue.js. We also are using Ethers.js as a Web3 provider. As I said before, our developments are aimed to be environment agnostic. So we hope if we are in need, we can move from Firebase, where it's actually hosted, to whatever we need. So it won't be a problem for us. So the only thing that maybe could be a problem in this moment would be the Firestore, but we don't foresee a scenario where we have to migrate our auxiliary database to another thing. And if that's the case, it's easy for us to do that change from Firestore to another not relational database, such as Redis or Mongo or wherever. We also use AWS. Actually, we are using AWS to host our blockchain nodes. So we have two full nodes for mainnet compatible with WebSocket capabilities using SSL certificates. And we have also a load balancer to point to those nodes in case we need. So every time you are using our front end, you will perform certain transactions against the blockchain, and this load balancer will choose the best mainnet node to perform the transaction and so on. And also we have a node for testnet. It's a node that you can interact with once you change the network. And that's it in terms of tech stack. In the future, we foresee to start with the mobile version of the Tropykus Experience, but we still have a path to walk towards that goal. And then some technical issues and limitations. The solutions we gave those technical issues, and what we have learned on that process. So this is a known enemy of developers, is the EIP 170. It's a constraint on the Ethereum virtual machine that forces you to have smart contracts with a size below this size, is to the power of 14 plus to the power of 13. And this plainly explained is just 24 kilobytes. So every time we wanted to come up with new business logic, this was a problem, because compound by itself was just in the limit. It was just hitting the limit. If you see our K-token smart contract, which is one of the massive smart contracts that we have, you will see that it's actually huge. It's about 2,000 lines of code, of course, and most of that is based on the previous system. So we are trying to do this, and another problem related to this is the block limit that we have on our RSK. So you see here that once we wanted to deploy on testnet sample market, the block limit is 6,800,000, and we were trying to do something bigger than that. And of course, there are some alternatives or techniques that you can use this. And this is something really nice I really like about software development, because, of course, blockchain development, smart contract development was something novel and new, and we were facing a new system and new constraints and everything and so on. But at the end, it's just software. So we can take advantage of what we have learned previously on software development. I highly recommend reading this jewel. I really like this book by Martin Fowler, Refactoring. So it helped me to come up with ideas on how to refactor the code. So just to put an example here, I have here a technique of separation of concerns or separation of responsibilities, where I have the general idea on the KI token smart contract on how at least this function, the main internal underlying update should be done, but it could be overridden by the KRBTC specific smart contract, and it's going to override this behavior just by doing some new things for what it's going to be the minting operation, or at least the underlying update for the mint operation. If it's a market that it's exposed to the Tropykus interest rate model, otherwise it will be used the previous one, the parent one. But at the end, it's just that. It's a matter of approaching this problem, seeing what you can do with your team, and came up with new ideas on how to optimize the code. So those are the learnings. It's not finished. We are still on the way to make it optimal, and came up with new ideas on how to solve the challenges that we face every day. We are starting to think on what the protocol version 2 is going to be for Tropykus, and this is something interesting for us because we are facing new challenges on based on the requirements that come from product, and how we solve those problems to reflect those decisions in the base code. So yeah, here are some key points that I just wanted to mention. So the upgrade from 0.5.16 to 0.8.6 forces to update the function signature for each method on the whole protocol. This was a massive work. The syntax is from of the language change from one version to another. So all the inheritance forces to use the override keyword explicitly, of course, doing some changes on the signature. We also had to update the assembly snippet that were originally coded on the protocol to fit the new version. And in terms of inheritance, we adapted some base smart contracts that are not going to be ever deployed to be abstract. So it's more readable even for developers to understand that this is just a base smart contract. Also for some abstract functions, the problems with the overriding that we had to foresee between what was the base smart contract on how the child smart contract was supposed to override those logics behind the overriding, and a lot of thought on separation of responsibilities. We already achieved a stable version that it's being audited. But as I said before, we are starting to think more on what it's coming from Tropykus on the version 2, on how we can bring more and more value to our users. So that's it from my side. So I guess we can open a space for questions and answers. So in the meantime, I have here about the release on mainnet. It's already released on mainnet. We are working with just 30 people to test the platform. And once the security audit report comes and everything is okay, we will open it for the general public. Regarding to the complete version, I guess you can go to our uh, GitHub repository and you will see everything. We are very open to publish whatever people need, and we are also keen to accept pull requests if users will see that there is something wrong or something like that. Yeah.
Okay. Thank you very much, Mesi. I think there is no more question. You have already read it. Let me see if there is another question, but it seems that not. So, okay. Thank you very much, Mesi, for participating. It was a really interesting talk. We are glad that you come here.
It was a
So,
pleasure for me, guys. It's always nice to share with the community and also to know what other people is doing. You can count with us for whatever you need. We are willing
okay.
to participate.
Before we leave, there is a new question. I can read it. You mentioned hitting the block gas limit. Have you faced any problems with estimate gas?
Not by estimating, but just the thing is that our smart contracts are very massive, and we are trying to limit what we have done over there. So it's more like trying to optimize uh, the logic behind each function inside the smart contract. Because yeah, the it's more like optimizing the code and reducing the size of each operation on opcode. Yeah. And yeah, but the estimation is pretty calculated on yeah, I don't know if this answers the question.
Um,
Okay.
it seems yes. So
Yeah, I mean,
there.
just to mention something something else about the this question is that the smart contract is quite heavy, and we got this problem on deploying the smart contract. So all the compiled bytecode is trying to get into the blockchain, and there's where we have the problem. So it's more a matter of reducing and optimizing the base code and just being optimal on what we do on each method, rather than estimating the gas for each unique operation. Yeah.
Okay. Okay. So well, we are getting without time. So thank you very much again, and I hope see you in another talk.
It's going to be a pleasure for me. And thank you to the scientific RSK team for inviting me here.
You're welcome. Okay. Goodbye, everyone. See you in the next scientific moment.